Hey, it's your friend Holden, and now you're probably thinking, "Hey, the bank is going to take my home." Well, that is the number one thing people say to me when I bring up reverse mortgages. And I get it. That belief is everywhere. It's what the neighbor told them, it's what their adult kids read online, and it's basically gospel in some circles. But there's one problem. It's completely wrong. Okay? Today I'm going to show you exactly why. Plain English, no jargon, no fine print gymnastics. So, my name's Holden, and I'm a lending strategist with Nexa Lending, and I'm here in St. Pete, Florida, but also am licensed in Iowa. Go Hawkeyes. So, my whole thing is helping homeowners 55 and up understand, what their options actually are. So, not what the rumor mill says they are. So, let's get into it. First, let's give the myth a little credit. It didn't come out of nowhere. So, early reverse mortgages, decades ago, think Reagan, had fewer consumer protections. Kind of like cars. Yeah, they didn't have some of the protections we have now. So, there were some bad actors, and then some people had genuinely confusing experiences. And the internet, guess what? It never forgets. So the reputation stuck, even after the product was completely overhauled. So today, the most common reverse mortgages is called the HECM. It stands for the Home Equity Conversion Mortgage. It's designed by HUD, and it's backed by the FHA. Now, those are like letters you've like, what? Just say the government. It's regulated, and the government's got you, which it is a good thing, okay? And it is one of the most regulated loan products in the entire mortgage industry, too. But here's the thing about regulations. They only will help you if you actually know what they say. So let me tell you what they say. When you get a reverse mortgage, you keep your name on the title of the home. Not the bank, not the lender, you. Kind of like a forward mortgage. A reverse mortgage places a lien on your property, just like a regular mortgage does, a forward. So that lien is how the lender secures the loan. But owning a lien is not the same as owning your home. Think of it this way. You've probably had a car loan. The lender has had a lien on the car. But whose car was it? It was yours. Same principle here. As long as you are living in the home as your primary residence, paying your property taxes, keeping your homeowner's insurance current, and maintaining the property, that home is yours. The lender cannot come in and take it. That is not how this works. So, now to be fair, there are situations where the loan does become due. So let's go through them, because transparency and rumor busting matter. The loan comes due when the last borrower no longer occupies the home as the primary residence. That typically means one of three things. 1, you move out permanently. 2, you pass away. And 3, you sell the home. It can also come due if you stop paying your property taxes, you stop paying your homeowner's insurance, or you let the property fall into serious disrepair. Serious. Notice what is not on the list. Just existing. Living in your home, living your best life, being retired, traveling, all that good stuff. So I get it. Having adult kids who are worried, none of that triggers the loan, okay? And here is something most people don't realize. When the loan comes due, your heirs have options, if it's one of them. They can still sell the home and pay off the balance. They can refinance into a forward traditional mortgage and keep the home. Or if the loan balance has grown beyond the home's value, which can happen, it can, but it's rare, it can happen. And this is the part that matters. They are not personally on the hook for the difference. The FHA insurance covers that gap. That is called a non-recourse loan. You or your estate will never owe more than what the home is worth at the time of sale. Well, that's crazy. Yeah, exactly. So let's reframe this. A reverse mortgage is not the bank taking your home. It is you using the equity that you spent decades building by living in that house. So without having to sell, without having to make monthly mortgage payments to fund the life you earned. Some people use it to eliminate an existing mortgage payment. Some use it to cover medical expenses or home repairs. And some use it to create a monthly income stream in retirement. Some, and this is a growing strategy, use it as a part of a larger retirement plan, specifically to protect other assets from being drawn down too early. So none of these are desperate moves. They are smart moves. Look, I'm not here to tell you a reverse mortgage is right for everyone, because it's not. But I am here to make sure that if you're 55 or older, 62 for a government loan, and you have equity in your home, you are making decisions based on facts, not fear, not myths, not rumors, not what someone's cousin's husband's lawyer's lawn maintenance pool boy said in 2023. If you want to know what's actually you qualify for, no commitment, no pressure, check my link in my bio to book a straight conversation with me, and we'll look at your specific situation and go there. So remember, I'm Holden. Holden helps. I'm here to help you, and we'll talk to you soon.